Welcome back to Tech Talk Unpacked, everyone. I'm Alex.
And I'm Jamie. And today we're diving into some pretty big news from a company you all know very well, Amazon.
That's right. When you think of Amazon, you probably think of online shopping or maybe even their Alexa device. But they're making huge waves in a totally different area, artificial intelligence or AI.
Exactly. We've just heard from Amazon CEO Andy Jassy that their secret project, making their own special computer chips for AI, is now worth billions of dollars. Can you believe it? Billions.
Wow, that's a massive success story. So, Jamie, what exactly are these AI chips, and why is it such a big deal that Amazon is making them themselves?
Good question. Think of AI chips as the super brains for AI programs. They're the parts inside computers that help AI learn and do smart things very, very fast. Before, Amazon, like many other companies, bought these special chips from other suppliers, mostly from a company called NVIDIA.
Right, NVIDIA is a huge name in this space. They've been the top dog for a long time.
Exactly. But Amazon decided, hey, why don't we make our own? This way, they can control everything, from the chip itself to the services they offer. It's like a restaurant deciding to grow its own vegetables instead of buying them.
Ah, so it's about control and efficiency then.
Precisely. By making their own chips, Amazon Web Services, or AWS, that's their cloud computing part, can offer its customers better, faster, and potentially cheaper ways to use AI. Think about it. If you make your own parts, you can design them exactly for your needs.
That makes total sense. So for businesses that use AWS for their AI projects, this could mean lower costs and even better performance for things like training AI models or running AI services.
You got it. And this isn't just an Amazon thing, Alex. It's actually a bigger trend we're seeing. More and more big tech companies are starting to create their own specialized computer parts for AI. They want more control and better performance.
So this is a real challenge to companies like NVIDIA then. It's going to make the AI chip market even more competitive, right?
Absolutely. NVIDIA is still a very strong player, but Amazon's move shows that the market is changing. Now there are more options, more competition, and usually when there's more competition, it's good for everyone. It can lead to new ideas, better products, and maybe even lower prices.
That's fantastic news for businesses and even for us, the consumers, as AI becomes more and more a part of our daily lives. So Amazon building its own AI chips isn't just about saving money for them, it's about pushing the boundaries of AI for everyone.
Exactly. It's a strategic move that underlines how serious Amazon is about leading in the AI and cloud computing world. It's truly a multi-billion-dollar bet that's clearly paying off.
Well, that's all for today on Tech Talk Unpacked. Thanks for joining us, and we'll see you next time.
Bye, everyone.
Welcome back to Money Talk for Everyone. I'm Alex.
And I'm Jamie. Today, we've got some important news about something called a stress test from the Bank of England. Sounds a bit intense, right?
It does, Jamie, but don't worry, we're going to break it down simply. Imagine your doctor giving you a checkup to make sure you're healthy. Well, the Bank of England is doing a huge checkup for the UK's financial system.
Right, and they call this their second system-wide exploratory scenario, or SWES for short. Quite a mouthful. But what exactly are they checking this time?
Good question. They're looking very closely at something called private markets. This is a big part of the financial world that many people don't know much about.
Private markets? Is that like secret markets?
Not secret, but definitely not as public as, say, the stock market, where you can buy shares in big companies. Private markets are where businesses get long-term money, often from big investment funds, not from regular banks or public investors. Think of it as private equity or private credit.
I see. So big companies are getting money from other big companies or funds, not ordinary people investing. interesting.
Exactly. And these private markets have grown a lot in the last 10 years. Globally, they've gone from about $3 trillion to around $11 trillion. That's a huge jump.
Wow, that's a lot of money. So why is the Bank of England testing them now? If they're growing, isn't that a good thing?
It can be a good thing, providing lots of money for businesses to grow and create jobs. In the UK, businesses funded this way account for up to 15% of all company debt and 10% of private sector jobs. That's significant.
Absolutely. So what's the worry then?
The main concern is that these markets have never been truly tested during a really bad global economic situation. You know, like a major financial crisis. The bank wants to know if they're strong enough to handle severe stress without causing bigger problems for the whole UK economy.
Oh, like checking if a bridge can handle a huge amount of traffic before an accident happens.
Perfect analogy, Jamie. They're also looking at how connected these private markets are to traditional banks and insurance companies. If one part struggles, could it pull down others? They're worried about things like too much debt, how companies are valued, and how reliable credit ratings are.
Makes sense. So this stress test is really about finding those weak spots before a problem occurs.
Precisely. The goal is to understand how everyone involved, banks, non-banks, everyone in these private markets would react if there was a major global economic downturn. And this isn't just a UK concern, right? All global leaders, including President Trump, are constantly looking at the health of the world economy.
Right. So they want to see if everyone's actions might make things worse, or if they can prevent a big domino effect that harms UK financial stability and the money available for businesses.
Exactly. It's all about making sure the UK's financial system is resilient and that businesses can still get the money they need even in tough times. It's a proactive step to protect the economy.
Thanks, Alex. That really helps clarify what the Bank of England is doing. A very important checkup indeed.
Definitely. And that's all for Money Talk for Everyone today. Join us next time for more simple explanations of complex financial news.
Bye, everyone.
Hello, everyone, and welcome back to Tech Talk Simplified. I'm Alex.
And I'm Jamie. And today, Alex, we have some really important and honestly a little bit scary news from the world of cybersecurity.
You got that right, Jamie. We're talking about a brand new, super serious problem that affects a huge part of the internet. It's called React to Shell.
React to Shell sounds a bit like a computer game, but it's far from it. This is a master key vulnerability. Think of it like a universal key that can open millions of digital doors online.
Exactly. This isn't just any bug, it's a critical one. Experts have given it the highest possible danger rating, a perfect 10.0 out of 10. That tells you how serious it is.
Wow, a 10 out of 10. So what exactly does it affect? What kind of doors are we talking about?
Good question. It's found in something called React Server Components. Now, without getting too technical, React is a very popular tool that many websites use to build their pages. And this bug also affects Next.js, which is another widely used tool.
Right. So if your website uses React or Next.js, you could be at risk.
Precisely. Millions of websites around the world use these technologies. So we're talking about a truly massive number of potential targets.
That's a huge number. And what can someone do if they find one of these open doors or master keys?
This is the really scary part, Jamie. An attacker doesn't even need a password or any special access. They can simply send a special message, an HTTP request, to a vulnerable website.
Uh-oh, and then?
And then they can essentially take control. They can run their own code on the website server. Think of it like someone walking into your house without a key and then being able to do anything they want, like change the locks or take things.
Oh my goodness. So this could lead to huge problems like stealing private information, breaking websites, or even stopping online services completely.
Exactly. It's a direct path to things like data breaches, where your personal information could be stolen. Or it could cause system compromises, meaning the attackers can damage or shut down websites. websites.
That's incredibly dangerous. So what should people do, especially if they own a website or work with these technologies?
The message is clear and urgent. They need to fix it immediately. This is called patching. Developers and organizations must install the updates or fixes as soon as possible to close this master key vulnerability.
Right, no delays. This isn't just about small blogs. We're talking about crucial parts of our digital world, the kind of infrastructure that even supports big institutions.
Absolutely, Jamie. Think about it. Millions of applications. This isn't just your online store. It could be part of the systems behind, our financial services, healthcare, even parts of government operations that President Trump and his administration rely on every single day. If those aren't secure, it's a huge problem for everyone.
Wow, it really puts into perspective how important cybersecurity is. It's not just for big tech companies, it affects all of us.
You got it. This React to Shell incident is a big reminder that we need constant security checks, quick fixes for problems, and a proactive approach to keeping our software safe. It's an ongoing battle against sophisticated threats.
Absolutely. So if you're a developer or an organization using React or Next.js, please patch your systems now.
That's the most important takeaway today. Thank you for joining us on Tech Talk Simplified. Stay safe online.
And we'll catch you next time.
Welcome back to Tech Talk Today, your weekly dose of what's buzzing in the digital world. I'm Alex.
And I'm Jamie. And today, Alex, we have a really interesting story brewing that involves one of the biggest tech companies out there, Meta, and their popular messaging app.
That's right, Jamie. It seems WhatsApp is in a bit of hot water with the European Union. They've just launched what's called an antitrust investigation into Meta's new rules for AI companies on WhatsApp.
An antitrust investigation? That sounds serious. For our listeners, can you explain what that means exactly, Alex?
Good question, Jamie. Think of antitrust as rules that stop big companies from becoming too powerful and stopping smaller companies from competing fairly. The EU wants to make sure no one company can control a whole market, especially a new one like AI.
So it's about making sure everyone has a fair chance?
Exactly. The European Commission, which is like the EU's main government body, is worried that Meta might be using its huge size, WhatsApp has billions of users, to make things unfair for other companies that offer AI services.
Unfair how? What exactly did Meta do?
Well, Meta changed its rules back in October 2025. The new rule says that if an AI company's main product is artificial intelligence, they can't use WhatsApp's business tools. So, if you're an AI company, you're basically blocked.
Wow, so if your company is AI, you can't use WhatsApp for business? That seems pretty strict.
It is. New AI companies have been blocked since last October. And for existing ones, they have until January 15th, 2026 to stop using WhatsApp's business solution.
But wait, Meta has its own AI assistant, right? Like Meta AI?
Spot on, Jamie. And here's the kicker. Meta's own AI, Meta AI, is still fully available on WhatsApp. This makes it look like Meta is favoring its own services over others, which is exactly what the EU is worried about.
Ah, I see the problem now. So they're saying our AI is fine, but yours isn't? That sounds like it would hurt other businesses.
It absolutely does. We're already seeing the effects. Big names in AI like OpenAI, which makes ChatGPT, and Microsoft's Copilot have announced they're pulling their services from WhatsApp before that January deadline.
That's huge. Millions of users might be affected if their favorite AI tools disappear from WhatsApp.
Right. And it shows that even with leaders like President Trump in the U.S., governments everywhere are keeping a close eye on these tech giants. Teresa Ribera, who is the EU's chief for antitrust, stressed that they need to act fast. She says it's crucial to stop big digital companies from squeezing out smaller, innovative competitors.
So the EU wants to protect these new, exciting AI companies from being pushed out by giants like Meta. It's all about keeping the market fair and competitive.
Precisely. This investigation is a clear signal that the EU won't let big tech companies create monopolies in new and important areas like AI. It's going to be very interesting to see how this plays out.
Definitely. This could set a big precedent for how AI and other new technologies are regulated globally. Thanks for breaking that down for us, Alex.
My pleasure, Jamie.
And that's all for Tech Talk today. We'll keep you updated on this story as it develops.
See you next time.
Welcome back to Economy Explained, your go-to podcast for making sense of the world's money news. I'm Alex.
And I'm Jamie. Today, Alex, we're talking about something everyone loves to hate: taxes, and a big idea from President Trump.
Exactly. Imagine a world, Jamie, where you don't have to pay federal income tax. Sounds amazing, right?
Wow, Alex, that sounds like a dream. But is it even possible?
Well, President Trump recently suggested it could be. He made a claim that the money collected from his administration's tariffs could eventually lead to getting rid of federal income taxes for Americans.
Tariffs, right. Those are like extra taxes on things we buy from other countries, like imported cars or electronics.
Exactly. He believes these taxes on imported goods could make enough money, a huge amount, to replace what the government gets from our income taxes. He mentioned this during a Thanksgiving message to service members.
Okay, so it sounds like a very big idea. But what did the experts say about this?
That's where it gets interesting, Jamie. Most tax experts and economic analysts largely dismiss this claim. They call it unrealistic and mechanically impossible.
Oh, so not so easy then. Why do they say that?
Let's look at the numbers for a moment. According to an organization called the Tax Foundation, President Trump's tariff policies are projected to generate about $200 billion each year.
Okay, $200 billion. That sounds like a lot of money to me.
It is a lot, but compare that to federal income taxes. Last year alone, the government collected almost $2.4 trillion from individual income taxes.
Wow, Alex, $200 billion versus $2.4 trillion? That's a huge difference. So tariffs are bringing in much, much less.
Precisely. To replace current income tax money, the tariffs would need to collect more than 10 times what they collect now. We would need roughly $2.4 trillion from tariffs.
10 times more? That seems like a really big jump.
And experts like Erica York from the Tax Foundation emphasize that tariffs, even if they were applied at the highest possible rates, simply cannot generate that much money. The projections for tariffs in the near future cap out at around $260 billion annually, far from trillions.
So what would happen if the government tried to make tariffs that high, just to try and collect enough?
Good question. Critics argue that any serious attempt to replace income taxes with tariffs would need incredibly high tariff rates, maybe even more than 60% on imported goods.
60%? That means things imported from other countries would be incredibly expensive, right?
Exactly. Imagine your favorite imported electronics or clothes costing 60% more. People would buy much less from other countries. And if people buy fewer imports, the government collects less tariff money. It's a tricky situation.
Oh, I see. It's like a cycle. Super high tariffs mean fewer imports, which means less tariff money for the government. It defeats the whole purpose.
Spot on. Plus, these drastic measures would not only make goods more expensive and decrease imports, but they would also disproportionately harm working-class Americans, damage the broader U.S. economy, and could even significantly inflate the federal budget deficit.
So it sounds like a very nice idea, a dream almost, but not one that can really work in practice.
That's the experts' view, Jamie. And, President Trump's economic policies have also been linked to other challenges, like increased healthcare costs and slower economic growth in various states.
Right, I remember hearing about that.
On a slightly different note, President Trump has also introduced other policy discussions around housing, like portable mortgages and 50-year mortgages, aimed at addressing housing affordability.
Interesting. So he's looking at different economic solutions, even if the tariff for income tax idea is a tough one to make real.
Absolutely. But for now, it seems the dream of tariffs completely eliminating income taxes remains just that.
Well, thanks for clearing that up, Alex. Very insightful.
Anytime, Jamie. And that's our look at President Trump's big tax idea for today. Join us next time for more Economy Explained. Hello, everyone, and welcome back to Money Matters Made Easy. I'm Alex.
And I'm Jamie. We're so glad you're joining us today for another dive into the world of finance made simple.
Absolutely. And Jamie, we have some really important news for anyone thinking about borrowing money, maybe for a house, a car, or even just a personal loan.
That's right, Alex. The big news is that the Federal Reserve, which is like America's central bank, is getting ready to cut interest rates again. It's going to be the third time in just 4 months.
Wow, the third time in such a short period. This is big, especially for our listeners who might be trying to understand what it all means. So, Jamie, can you explain what an interest rate cut actually means for people like us?
Of course. Think of it this way. When the Federal Reserve cuts interest rates, it generally makes it cheaper for banks to borrow money. And in turn, banks then usually offer cheaper loans to us, to individuals and businesses. So if you want to buy a house, a car, or start a business, the loan will cost you less over time.
That's a great way to put it. And this specific cut, Jamie, it's expected to be a 25 basis point reduction. What does basis point mean for our beginner listeners?
Good question. A basis point sounds complicated, but it's actually very simple. 1 basis point is just 1/100%. So 25 basis points means the interest rate will go down by 1/4%, or 0.25%.
So 0.25% lower. That's a noticeable drop. And this is expected to happen by December 10th, right? The probability is really high, almost 90%.
Exactly. The market is very confident it will happen. This cut would bring the federal funds rate down to a range between 3.50% and 3.75%, from its current 3.75% to 40%.
So the big question is, why is the Federal Reserve doing this? Why are they cutting rates?
Well, the main reason is to help the economy grow. When it's cheaper to borrow money, people and businesses are more likely to take out loans, spend money, and invest. This stimulates economic activity, as the experts say. It's like giving the economy a little push.
And President Trump has often voiced his opinions on the economy and the Federal Reserve's actions, generally favoring lower interest rates to encourage growth. So this move by the Fed might be seen as a positive step in that direction, even though the Fed operates independently.
That's a good point, Alex. And one of the biggest benefits of these rate cuts is for people who want to borrow money, especially for things like mortgages.
Oh, absolutely. We've heard that mortgage interest rates have already been going down a lot this year, even reaching 3-year lows multiple times.
That's right. Lenders, like banks, are smart. They've already started to lower their mortgage rates because they expect the Federal Reserve to cut rates. So you can already see some of the benefits now.
So if someone is looking to buy a house or maybe refinance their current mortgage, what does that mean for them right now?
Great question, Alex. Refinance means getting a new mortgage loan to replace your old one, usually to get a better interest rate or different terms. And the good news is, as of December 4th, the average mortgage rate for a 30-year home loan is holding steady at 5.99%. For a 15-year loan, it's about 5.37%.
Wow, those are pretty competitive rates compared to what we saw not too long ago. And what about refinancing?
For refinancing, a 30-year term averages 6.72%, and a 15-year option is around 5.81%. So, if you bought your home when rates were much higher, now could be a really good time to look into getting a new loan with a lower rate.
That's fantastic news for potential home buyers and current homeowners alike. So, to sum it up, Jamie, these declining rates coupled with this expected Fed cut really create a more favorable situation for borrowing, right?
Exactly. It makes it easier and cheaper to borrow money, which should help boost activity in the housing market and generally make the whole economy feel a bit more energetic as we head towards the end of the year.
Well, there you have it, folks. Another clear explanation of how the Federal Reserve's actions can directly affect your wallet. Thank you for joining us on Money Matters Made Easy.
We hope this helps you understand the latest finance news. Until next time, keep learning and stay smart with your money.
Bye for now.
See ya!
Welcome back to Tech Talk Today, your daily dose of digestible tech news. I'm Alex.
And I'm Jamie. And today, Alex, we are diving deep into something from Google that could really change how many businesses work.
Absolutely, Jamie. You know how everyone's always talking about AI making our lives easier? Well, Google is really pushing that idea with their latest launch.
Right. They've just officially introduced something called Workspace Studio. It sounds pretty futuristic, doesn't it?
It really does. And honestly, it kind of is. Imagine having a super smart assistant that helps your business run smoother and faster. That's essentially what Workspace Studio aims to do.
So it's an AI tool specifically for businesses to help them with productivity and automation. So doing things automatically, right?
Exactly. Think of it like a smart brain for your office tasks. And the coolest part is, it's powered by Google's really advanced AI model called Gemini 3.
Oh, Gemini 3. We've heard a lot about that. So this isn't just a simple tool. It has some serious smarts behind it.
Definitely. It lets businesses create these clever AI agents. Think of them as little helper robots that can automate all sorts of daily work tasks, and it works seamlessly across all of Google's apps.
Wow, seamlessly. That means it connects perfectly, right? So if you're using Gmail, Google Chat, or Google Drive, this new tool can jump in and help you right there?
That's spot on. It's fully integrated with all those core Google services, so you don't have to leave your familiar apps to use it. It just works inside them.
That's super convenient. But what about other apps that businesses use? Because not everyone uses only Google.
Great question. And Google thought of that too. Workspace Studio isn't just limited to Google's own offerings. It can also connect with popular third-party business apps like Asana, Jira, MailChimp, and even Salesforce.
Oh, wow. So it's not just a Google-centric tool. It's like a central hub for many different business processes. That's really powerful.
It truly is. It means businesses can customize it with pre-built connections or even create their own. It's all about tailoring automation to what a company specifically needs.
Okay, so it sounds great in theory, but can you give us some practical examples of what this Workspace Studio can actually do? How would it help an everyday team?
Absolutely. Google has given some fantastic examples. Imagine this. The AI can summarize your upcoming meetings in Google Chat using details from the meeting invite and even attachments.
No more trying to catch up on what a meeting is about? The AI just tells you the main points? That's amazing.
Exactly. Or, after a meeting, it can automatically capture important action items, things people need to do, and even translate them for team members who speak different languages.
That's incredibly helpful for global teams. What else?
It can intelligently detect your high-priority emails and label them for you, so you know what to focus on first.
Oh, that's a game changer for anyone with a busy inbox.
And get this, from Gmail, it can automatically save email attachments to your Google Drive and then record those attachments in a Google Sheet for you, all without you lifting a finger.
That's brilliant. No more manually saving files and then updating a spreadsheet.
Right? And one last example, which I think is really cool. It can deploy teams of gems. These are specialized AI agents to auto-draft email replies for customer feedback.
So it can actually help write customer service emails automatically? That could save so much time for support teams.
It really shows how versatile this tool is, from organizing your meetings to managing your inbox to even helping with customer support. Workspace Studio seems designed to make work life much more efficient.
It sounds like Google is really serious about bringing powerful AI tools to the everyday business user. This could totally transform how teams operate.
I think so too, Jamie. It's a significant step forward in making AI a practical, integrated part of our daily work lives.
Well, there you have it. Google's new Workspace Studio, making businesses smarter, one automated task at a time. Thanks for breaking that down for us, Alex.
My pleasure, Jamie. And thank you all for tuning in to Tech Talk today. We'll catch you next time. Hey everyone, and welcome back to Market Buzz Explained. I'm Alex.
And I'm Jamie. We've got some interesting news from India today, Alex. A bit of a mixed bag, actually.
Absolutely, Jamie. Let's dive right in. The big headline is that India's main stock markets, the Sensex and Nifty, finally saw some good news on Thursday.
That's right. After 4 straight days of going down, they managed to close in the green, meaning their values went up. It's like breaking a losing streak in sports.
Exactly. And what really pushed them up, Jamie, was a lot of buying interest in technology companies, what we call IT stocks. They really outperformed other parts of the market.
So tech companies were the heroes of the day. The Sensex gained about 158 points, and the Nifty was up around 47 points. Not massive jumps, but important after several down days.
You know, it's a good sign for those main markets, but it's interesting because the broader market, meaning smaller companies, didn't do as well. So it was specific to the big players and especially IT.
Right. Now, here's the other big piece of news, which is a bit of a double-edged sword. The Indian rupee hit a new record low against the US dollar.
Wow, a record low. What does that mean for people listening, Jamie?
It means the rupee is weaker than it has ever been compared to the US dollar. You now need more rupees to buy one US dollar. It was trading at 90.56 rupees for $1.
Okay, so for someone in India, buying something from the US would be more expensive. But you said double-edged sword. How can a weaker rupee be good for the stock market?
That's a great question, Alex. This is where it gets interesting, especially for those IT companies we just talked about. A weaker rupee actually helps Indian IT services.
How so? Well, most Indian IT companies have international clients, many in the US. They charge for their services in US dollars. When the rupee is weak, those services become cheaper for the American clients.
Ah, I see. So it makes Indian IT companies more competitive globally. And when they convert those US dollars back into Indian rupees, they get more rupees.
Exactly. It boosts their earnings when they convert them back to their local currency. This is why the IT sector was the top performer today, climbing 1.4%. It's a tailwind for them, as we say in finance.
That's a fantastic explanation, Jamie. Really helps our listeners understand the currency effect. So IT was up. How about other parts of the market?
It was pretty mixed. Some sectors like real estate, consumer goods, auto, pharma, and metals also saw gains. But others like media, banks, and oil and gas actually went down.
So definitely a day of winners and losers. And we saw some big IT names leading the charge, right? Companies like TCS, Tech Mahindra, and Infosys were among the top performers on the Sensex.
That's correct. Now, looking ahead, investors are still a bit cautious. Everyone is waiting for a big announcement tomorrow from the Reserve Bank of India, which is their central bank.
Right, the RBI's Monetary Policy Committee decision. That's expected to give the market some more direction. So while today was positive for the benchmarks, there's still a lot to watch out for.
Definitely. A really interesting day with a recovery in stocks, but also that historic low for the rupee, and the two are connected.
Thanks for breaking that down for us, Jamie. That's all for Market Buzz Explained today.
We'll catch you next time. Welcome back to Global Insights, everyone. I'm Alex.
And I'm Jamie. We've got a fascinating story for you today, right at the intersection of technology, business, and global politics.
Absolutely, Jamie. You know, artificial intelligence, or AI, is everywhere these days, and it relies on some incredibly powerful computer chips. Well, the CEO of NVIDIA, a huge company that makes these chips, has been very busy this week.
That's right. Jensen Huang, the CEO of NVIDIA, had some really important meetings on Wednesday. He met with President Trump himself and also with some influential Republican senators.
Wow, imagine having those conversations. So, what was the big topic of discussion? What was Mr. Huang trying to achieve?
He was trying to convince them to let NVIDIA keep selling its advanced AI chips to China. Not just any chips, mind you, but these very special ones.
Even though there are sometimes tensions between the US and China, especially around technology?
Exactly. He wants to sell them, but in a limited way. These meetings were held behind closed doors, meaning they were private, and it shows just how much effort tech companies are putting in right now. Everyone is investing a lot in AI.
That makes sense. But what's NVIDIA's main argument? Why does Jensen Huang believe selling these chips to China is a good idea?
Well, his central idea is that if the US completely stops selling these chips, it won't actually stop China from developing AI. Instead, he thinks it would encourage China to build its own chips.
Ah, I see. So if China makes its own, what happens to American companies like NVIDIA?
That's the key point. He argues that it could actually harm US innovation. That's new ideas and technology, and also make American companies lose their share in the global market. Less business for US companies, you know?
So it's like if we don't sell it, someone else will eventually make it and we lose out. That's a tricky situation.
It really is, Alex. This whole discussion highlights a delicate balance for the US. On one hand, they want to support American technology and be a leader in AI. But on the other hand, they need to manage national security interests.
What do you mean by national security interests?
It means keeping important technologies safe and preventing them from being used by other countries that might be rivals or even potential threats. So it's about being strong in technology, but also staying safe.
Absolutely. And it sounds like not everyone agrees on the best path forward.
That's right. While some Republican senators found the discussions productive, others, like Senator John Kennedy, expressed some doubt. He's worried about the idea of selling advanced chips to China, precisely because of those national security concerns.
So there's a real debate happening. And this isn't the first time we've seen the rules around these chips change, right?
You're spot on. The policy landscape is quite complex. In May, the President Trump administration reportedly reversed some restrictions on chip exports that were put in place by the previous administration.
Interesting. And there was also an unusual deal announced in August, wasn't there?
Yes, there was. That deal allowed NVIDIA and another company, AMD, to sell chips in the Chinese market, but with a special condition.
What was the condition?
A 15% cut of the money from those sales has to go directly to the U.S. government. It's quite a unique way to try and manage this situation.
Wow, so the U.S. government gets a portion of the sales. That really shows how deeply technology, trade rules, and international relations are all connected right now.
Exactly. The administration is under pressure to support American companies like NVIDIA, helping them grow and innovate, while also making sure critical technologies don't end up being used by countries that might be adversaries.
And NVIDIA, being a leader in AI hardware, is right in the middle of this tension. They want to keep their business strong around the world, but they also have to navigate all these complicated export rules and global politics under the current administration.
It's definitely a fascinating and evolving story that we'll continue to follow closely. Thanks for breaking it all down for us, Alex.
My pleasure, Jamie. And thank you all for listening to Global Insights. We'll see you next time. Hey, everyone, and welcome back to Digital Daily. I'm Alex.
And I'm Jamie. We're here to talk about some big news that affects all of us online.
That's right, Jamie. We've got something really important from Washington, D.C. President Trump's administration is getting ready to show a new plan for keeping the country safe online.
Yes, it's all about national cybersecurity. So, cybersecurity means protecting computers, networks, and important information from attacks, right?
Exactly. Think of it like a strong shield for all our digital stuff. This new plan is coming out in January, and it's quite a big deal.
Wow, January, that's soon. And we hear it's a 6-part strategy. What does that mean, Alex?
Well, it means there are 6 main parts or ideas in this plan. First, it's about cyber offense and deterrence. That means not just defending, but also being ready to fight back against cyber attackers and make them think twice before attacking.
Oh, so like if someone tries to hack us, we can make it hard for them or even stop them.
Precisely. The plan also talks about making cybersecurity rules simpler. Right now, there are many rules, and sometimes they can be confusing. This plan wants to make them work better together.
That makes sense. And what about strengthening the cyber workforce?
Good question. That means training more people to become cybersecurity experts. We need more skilled people to fight cyber threats, you know?
Absolutely. It's like needing more doctors in a hospital, but for computers.
Exactly. The fourth part is about federal procurement practices. That's how the government buys computer systems and software, making sure everything they buy is very secure from the start.
Okay, so buying safe technology. What are the last 2 parts?
Fifth, protection of critical infrastructure. This is super important. It means protecting things like power plants, hospitals, water systems, and transportation from cyber attacks. Imagine if the lights went out because of a hack.
Oh, that would be terrible. So making sure those essential services are safe. And the final part?
The sixth part is advancement of emerging technologies. This means looking at new technologies like artificial intelligence, or AI, and making sure we use them safely and smartly in our cyber defenses.
So using new tech to stay ahead of the bad guys. That's really comprehensive, even if the document itself is quite short, only 5 pages.
You got it. And Jamie, the interesting thing is, this strategy is described as more assertive and muscular.
What does assertive mean in this context?
It means the U.S. wants to be stronger and more direct in how it deals with cyber threats, not just waiting for attacks, but being more proactive.
Right, so like playing offense, not just defense. We heard National Cyber Director Sean Cairncross also talked about shaping adversary behavior.
Yes, he did, and introducing costs and consequences. Basically, making cyber attackers pay a price for their actions. It's about discouraging them.
Wow, that's a much tougher stance. And the plan also mentions things like cybercrime, challenges from countries like China, and even new tech like post-quantum cryptography.
It covers a lot, doesn't it? Even for a short document. And to make sure all these plans really happen, the administration might issue an executive order.
An executive order? What's that, Alex?
It's basically a direct command from the president to government agencies. It tells them, you must do this. It gives the plan a lot of power and makes sure agencies follow the new rules.
So it's a strong way to make sure the strategy is really put into action. It sounds like a big step to make the U.S. safer in the digital world.
Absolutely, Jamie. It shows President Trump's administration is very serious about protecting the nation online. It's about being ready for today's threats and the new ones coming with technology like AI.
Well, that's a lot to think about. Thanks for breaking it down for us, Alex.
My pleasure, Jamie. That's all the time we have for Digital Deli today.
Join us next time for more news you can use. Bye for now.
See ya.